It's 4:26 in the afternoon, Eastern Daylight Time, November 4th, 2010. And we're looking at the S&P 500 technical analysis update using time-honored techniques to understand modern markets. This is brought to you by freechartvideos.com. And this video is for educational purposes only and is not intended to be any form of investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own due diligence and make investment decisions that are suitable for your financial situation. I'm not a licensed professional. I'm just a guy who apparently knows, at least for the past 60 days or so, where to draw the lines on charts. So let's look at them. First, a super quick review of our underlying thesis. If you've seen my videos before, you can fast forward through this, but if you haven't, this is very important. The S&P was in a channel up until May 2010, where it made a small head and shoulders pattern, and then hit the flash crash. My personal feeling is the flash crash, while it might have been touched off by a trade activity of some type, the market was primed for it. Unfortunately, on this week, I was traveling, so I have to confess, I had to sit through that. That was not fun. But anyway, I'm not a day trader. I'm more of a swing trader. So that caught me off guard. I was thinking we're probably going to bounce here. It looked like there was some firming up, and then bam! And I saw this on an LCD monitor in an airport, wherever I was. I can't remember. Maybe it was Buffalo. But anyway, stocks then traded down in what I believe we will see at some point down the road as just a bull flag. Not a bear flag, a bull flag. In other words, this is the correction for the large move that the S&P made off of 666 to 1220, or actually a little shy of 1220. It made an inverted head and shoulders pattern that broke out, pulled back. This orange line is the line drawn across the October 2007 bull market high, across the 2010 April highs. We have surpassed that line. Folks, if you know anything about charts, getting over this line blows out any thesis or idea that we have been experiencing a bear market rally. I'll say it again. This is not a bear market rally. The sentiment may be bearish. The economy might be bad. But this is not a bear market rally. This is a bull market. If you know something about bull markets and bear markets, you know that the sentiment does not always match with what the market does. When everybody's a bull, that's the top. When there are still lots of bears and everybody's worried, the market goes up. And that's what we're doing. Anyway, when we look at this inverted head and shoulders pattern, you can see that the measured minimum target from that pattern is, I've got my line here blue. I think every time I measure this, there's some kind of squonky candles down here, but it's roughly 1240, 1250. I've been saying all along, due to the channel that we've been in, which let's look at that channel on an hourly chart. I've been saying all along that I think we are going to test and we're going to get to the 1220 to 1222 area. I've been saying this from back around 1160 or so. And lo and behold, I must confess I did not expect it to happen in one day off of this bottom and back to the top of that channel within one day. I did not expect that. But it happened, and this channel is obviously still working. Now, I want to say something about indicators. Things like stochastics and MACD and RSI. You know, that stuff might work when things are going sideways, but I'm telling you, if you've been relying on indicators to tell you when and where and how much, you've probably been really you've probably really been disserved by those indicators for the past 60 days, if not the past 18 months. You need to learn to draw lines on these charts and know what those lines mean. I'm going to say one thing real quick, then we're going to take a look at a smaller portion of this chart. What I want to say is this. John Templeton of Templeton Funds, it is ascribed to him that he said, when I finally gave up on stochastics and indicators and started drawing lines, I started to make money in the markets. Think about that. Okay, as we got in to this chart and we started looking at some of this region in a little bit more detail, I want to point something out to you. The line that I've highlighted right here, I believe is serving as the neckline to an ascending triangle. And how do you measure the implied move out of an ascending triangle? You take the depth of the first reactive move from the top boundary, like so. I probably could actually make that a little bit more because we were a little bit deeper on this second touch. And then you add that to the top, to this flat line. Guys, we made that in one day. Now what's going to happen next? Well, there could be a pullback, but I'm not so sure. And I'll tell you why I'm not so sure. If you look at how well this held throughout the entire day, this essentially created a bull flag. It's right after this straight line run up. And this flag started to break out near the end of the day and ended almost exactly touching the top of this channel. If this bull flag was formed in there's an old saying that says the flag flies at half mast. What that means is these flags in a bull market will form about halfway through the final distance of the move before a counter move occurs. It would not surprise me. I'm not saying this is going to happen because this line should be resistance. But it would not surprise me if we get over this line tomorrow and we blow out of this channel. And at that point, we will have turned this channel line into medium support, but I think we will have turned this old high from April 2010 also into support. In other words, I'm just watching this. I'm not the least bit worried because the overall picture, just to remind you, is that this S&P chart is going to make it to between 1240 and 1250. And that's the minimum from this pattern. If we look back here, we also see a small inverted head and shoulders. Doesn't that look a lot like this? Only this one is much smaller. And you can see that the implied move from this head and shoulders would have been here, but the market kept on going. It would not surprise me one bit if this is the move that some people have been talking about, seeing a potential for the 1300s in the S&P. But you have to watch it day by day, see when there is a sign of a reversal. I'll be on top of that. I'm trying to do one of these videos every day. So I hope you've enjoyed this, and I would appreciate it if you would stop by freechartvideos.com, take a look and see what's going on. We've got a bunch of charts there, and I really want to encourage you to come by the website. The reason I'm doing this is I'm trying to build up traffic at that site for the obvious reasons. I don't want to charge for it. I want to keep it free. And if you tell your friends about this site, and if you think what I'm doing is valuable and has helped you, then please tell folks about it. I don't know of another analyst on the internet who is going into this kind of detail and using these techniques to bring some light to these markets. Take care, and check back tomorrow for more stuff.